I mean, the merits are that the aggregators, which are namely banks, because we don't really have that many brokers in Pakistan, unlike UK, where you have mainly a broker-led distribution called IFAs, independent financial advisors.
Absolutely.
So I think that in Pakistan today, the banks are the main, shall we say, distribution channel for these products. The other possibility would be telecom companies thinking outside of the box, and platforms like Amazon, if there were one in Pakistan. These would be the alternative distribution channels, but the main distribution channels remain either the direct sales force of the insurance company, which then is not bank assurance, or banks, which is then bank assurance. And you have a host of banks in Pakistan, but obviously there are a handful which control roughly 70 to 80% of the market. Yeah. If you take Habib Bank and you take MCB and you take another three banks, they control roughly 60% of the distribution in Pakistan. Yeah. So I think that the distribution of insurance products through banks is not a new thing. It's been there for ages. But what is new is the technology which is being applied in the distribution of these products. By technology, I mean, for example, that you could have everything or a long-term savings plan to be distributed on an iPad, so that the issuance of the policy, the maintenance of the policy, the investments in which the monies are put into are all on the iPad for a sales guy to engage with the customer. And he doesn't have a paper-based trail to struggle with. Everything is automated. And that is where I think it's the enabler and the differentiator. The other thing about bad thing, as you say, about bank assurance is that as bank assurance is a commission-led business where the bank expects to earn a commission for distributing the product, the life insurance company or the insurance company expects to make money as well. And the problem there is that sometimes these commissions have been rather high. Now the SECP has brought in rules in Pakistan which have capped the amount of commission the banks can earn. And in that sense, it's a good deal for the consumers. Yeah. It may not be such a good deal anymore now for the banks to be, earning a very high commission. But over time, I think the banks will realize that if they're in the long-term business, that it's probably better to serve their customer in a sensible way. And most banks have fallen in line with the new requirements from the SECP. So I think that overall, the major issues in emerging markets in bank assurance has been mis-selling. Selling insurance solutions to customers who don't understand what they're buying initially. And then when they wake up after 6 months and they realize there's no money on their account because most of the money has gone to pay the commission. Okay. So I think those sort of games are now few and far between. The UAE, for example, has brought in very, very strict rules on two things. One is capping the commission to the banks. And number two is what we call customer profiling, or risk profiling the customer. And more importantly, the suitability of the solutions that are offered to the customer based on the needs that were profiled. And all that has to be automated, and an audit trail has to be available to the regulators, auditors when they come in. So that I think is a good thing. Maybe it's overkill now, going from one extreme when commissions were as high as 8% to now commissions are now 4%, capped at 4%. Countries like Malaysia, which has been in the lead business, they did this back in 1990s and late 1990s. They had already realized that that was the way forward. But Malaysia is a very small country, 30 million people. Pakistan, on the other hand, is 220 million people. Yeah. Even with your ID card, Nadra, you can have it electronically, not only to pay bills, but you can also buy simple basic insurance on a daily basis. Yeah. People don't have so much money because Pakistan, the insurance premiums generally are collected annually, not on a monthly basis like in Europe. Yeah.
Right.
So as the premiums are paid annually, it's a lot of money to be paid annually, and the middle income class struggling with inflation, the rupee devaluation right now, is a bit hard put to start spending money on such, shall we say, luxuries. So it's really, the bank assurance is for a middle income consumer segment, which is already under pressure, not just in Pakistan, in many countries now since the war started in Europe in February this year. Inflation here in Luxembourg is now running close to 10%. Yeah? And the energy prices have gone through the roof, like in your country. Yeah? So I think it's everywhere. I mean, the people don't realize, they think that Pakistan's problems are somewhat special. I agree with you. But I think that the common denominator is across the world right now. The shortages of materials,
Like the
semiconductors is one of them.